Hello, in today's video we're going to break down if there are any particular mortgages that are set up specifically for limited company directors. So firstly, when you're a limited company director and you're applying for a mortgage, every lender has such different criteria when you're going through the process. And although there's no lenders that have got products specifically for limited company directors, some lenders have their criteria set up that just massively benefits you if you do own your own business. The reason it's so important to speak to a lender who has their criteria set up specifically for limited company directors is that some lenders will look at the money you've taken from the business, which will be your director's salary and also your dividends, which is great if you're not looking at maximising your borrowing. However, although people take money from the business, there's also a lot of profit that's usually left in the business that some lenders just won't use for the affordability tests. If we're speaking to the correct lender, they will allow you to not only take your director's salary that you've paid yourself, but they'll also look at the business profits for the year, and that will be net profits. And even with some lenders, they will allow you to look at the net profits even before tax, which has a massive increase as to how much you can borrow when you're going through the process. When you're applying for the mortgage as a limited company director, you will need to provide some extra documentation that you wouldn't need to do if you are employed. So some of the documents that you would need to provide is, rather than just having your own personal bank statements, you do need to provide the business bank statements just to make sure that the profit you've put through the business more than matches up as to what you're declaring on the application. And on top of that, you'd also have to show your personal tax computations and tax year overviews just to show your personal income for the year on top of that. And thirdly, you need to show your limited company accounts that your accountant has submitted to yourself that have been fully submitted to HMRC. Depending on which lender you're looking at, most lenders want to see the last 2 years limited company accounts to be able to figure out how much it is you can borrow so they can assess your profit and also the director's salary that you've paid yourself. Although you are a limited company director and some people see it as they are employed by their company, you still need to see a longer term view of how much salary you've paid yourself. The main reason people do this is they want to make sure that the salary that you've paid yourself is sustainable for the business and you haven't just increased this just to be able to get the mortgage application through. Although lenders can accept 1 year, because there's not a huge amount of options available for you, it doesn't necessarily mean you'll be able to get the best interest rates available if you just have your 1 year's accounts. If you've got your second year's worth of accounts, it really does open a doorway up to lenders that can offer you standard rates, and also some high street lenders that have their criteria set up nicely for limited company directors. My name's Anthony from Bolt Mortgages, and if you are looking at buying a property as a limited company director, I want to find out more information, don't forget to press like and subscribe.